It was recently announced that Saudi Aramco, the largest oil company in the world, which supplies 13% of the world's oil supply, more than the next 6 biggest oil companies combined, is going public. Saudi Aramco is phenomenally profitable. For example, for the first half of 2019, it posted a net profit of $46.9 billion, almost all of which was paid out in dividends to the Saudi state. Now, of course, any company that profitable will attract a high price at IPO, and for a comparison, for the same time period, Apple, the world's largest company by market cap currently, posted a net profit of $21.6 billion, and ExxonMobil, the largest listed oil company, made $5.5 billion. Now, Saudi Aramco recently announced its plans to go public in what could be the biggest IPO of all time. It is seen by many as a plan to diversify the economy as part of the Saudi Vision 2030. Now, the Crown Prince originally wanted a valuation of $2 trillion. However, there's recently been a major reduction in valuation, in large part due to the macro outlook for oil prices and also because of recent environmental concerns. And there has also been a huge range in valuations. For example, the Bank of America has a range of $1 trillion. Now, originally the plan was to have a huge international roadshow and marketing campaign aimed at selling Aramco shares to international investors. However, that's been scaled back because international investors were very skeptical of the valuation, which is based on decades of future predicted oil production and also oil prices.
Stephen, overall, in their prospectus, they say that the forecast is for oil demand to peak around 2035. Is that later than you expect or sooner than you expect? Is it in consensus?
I do appreciate and I do think, and that is one of my biggest concerns about the issue with the IPO, that Aramco is making some rather optimistic views on demand and on the price of oil. So 2035, look, that is a long time into the future. So I'm not going to really comment on the length of that. But what I will say is just anecdotally, what we've seen just over the past 2 years with regard to the amount of EVs coming to the market and the amount of product EVs that the governments are demanding and that the industry is responding to. So just keep in mind, every time you see a Tesla or a Prius or any other sort of hybrid out on the road, that is oil demand that is lost, that is never coming back. So and it's been a rapid transformation just in a few years. So if I had to hazard a guess, I would say we would see the demand decay occur sooner rather than later on that 2035 forecast.
And this is a very important point to bring up. Now, they describe long-term value creation through crude oil price cycles and improving sustainability by leveraging technology and innovation to lower our climate impact.
I've changed.
So even they state that crude oil prices play a crucial role in their value proposition, and they also acknowledge the environmental concerns. The firm said it has no current plans for a foreign share listing now, and saying long discussed plans for a 2-stage IPO, including an offering on a foreign exchange, have been put aside. Now, as a result of this, a really important consideration is the macro outlook for crude oil prices. So let's have a look.
I want to do this monologue and then go into hiding, okay? Not even Sean Penn will find me.
Now we can see here a clear channel between around $20 and $40 that range for a couple of decades before spiking from around 2004 to a top of around $150 in late 2007. We've seen a broad decline since that point. We obviously had a sharp crash in 2008 with the Great Recession and all, and then it bounced back up to around the $100 range, and then a sharp correction in 2014. We now currently sit at around $56. Now generally on this chart, we're seeing lower highs and lower lows as well. So it's worth bearing, pardon the pun, in mind that we could see it go back to this $20 to $40 range in the coming years, and this is significant because of, well, inflation. Perhaps we'll in fact see an acceleration of global oil demand, and we won't have a recession despite the best efforts of the inverted yield curve, and maybe this could go up, who knows. But as highlighted by the investor sentiment from an environmental perspective, and also the general shift to electric vehicles, insert a cliche Elon Musk Cybertruck reference for the YouTube algorithm, by the way, smash that like button, this seems increasingly unlikely. Now, back to Saudi Aramco specifically.
This show is way too long, isn't it? It's way too...
Now, despite this potentially bearish macro scenario, there is an important point. The profits are truly extraordinary, and also there is the potential value proposition of huge dividends for investors. Whereas extracting North Sea oil is expensive due to its location under hundreds of feet of water, oil in Saudi Arabia is relatively close to the surface. Now, the cost of production plays a large role in this. For example, it costs just $2.80 for the company to lift each barrel of oil, compared with around $62 per barrel on the world market, resulting in vast profits. It's said that its operating cash flow in 2018 was $121 billion. And it would pay out dividends worth $75 billion this year. Now, because of this response from international investors, Saudi Aramco is really focused on Saudi investors and investors from the Gulf region. And recent news indicates that they are in fact on track. The arrangers of the IPO have indicated in private discussions that they already have nearly enough orders to cover the institutional part of the deal. And fund managers have until December 4th to subscribe to the deal. So it will be very interesting to see how this plays out. What are your thoughts? Are you bullish or bearish on Aramco? For more compounded valuable content, subscribe and like.